The Budget tab is where every decision you've made so far culminates to create your annual financial plan. When you receive your control panel, your budget will be completely populated based on your previous year's actual financial performance. It is easier to budget next year by moving your last year's costs up or down than it is to start with a blank sheet. The budget has 4 parts that we will examine. First, your revenues. Second, your direct costs. Third, your fixed costs. And fourth, your profit. The revenues are imported from your Revenue Forecast tab by default, but they can also be made to come from your Revenue Drivers tab. These revenue cells are tan, which means that they can be typed into, but it is recommended that you make the changes instead on your Revenue Forecast or Revenue Drivers tabs. In the budgeting process, it is important to remember later why you made the decisions you did when planning. When you look at your revenue tabs, you can see what you were thinking as you adjusted the percentages of growth in your Revenue Forecast tab or your prices and volume in the Revenue Drivers tab. Another secret for remembering what you were thinking as you budget is to add comments in the cells. Let's say you want to increase a certain month's revenue because you have pre-sold a $10,000 job in that month and you want to account for it. You simply increase that month by $10,000, and then you can right-click on that cell and select Insert Comment. You can then add a comment that will forever remind you why you hard-coded that month's sales. If you choose to use the Revenue Drivers tab for some of your revenue sources, here is how to make sure those revenue sources pull that information from that tab instead of the Revenue Forecast tab. Click on the revenue cell in the first month, which will most often be January. Add an equal sign in the cell. Then click on the Revenue Drivers tab. Then click on the revenue cell for the first month for the offering you want brought in from the Revenue Drivers tab. Then hit Enter. You will then see the formula in the formula bar that shows the source of that cell is now from the Revenue Drivers tab and not the Revenue Forecast tab as the others are. You then copy that formula across the rest of the year by putting your cursor over the small black box in the cell when it is highlighted and when your cursor becomes a small black cross. Left-click your mouse and hold it while dragging to December, and then release your mouse. The formula will then be in all months, and each month's numbers will show up across the year. Scrolling down, you will see your direct costs. You will notice that some rows are not in tan, but are in white. This indicates that these rows are automatically populated and are being imported from another tab. The information you put in the Labor tab, under Direct Labor and Sales Commissions, is now reflected here since both of them are considered direct costs. Here you can see the business owner is budgeting for bonuses. The labor plan does not budget this for you, so that expense will be manually input in your budget. Usually, direct costs are driven by your revenues. When this is conspicuously true, such as in materials and supplies, equipment rental, and landfill fees, when you receive your control panel, it will show these numbers are created as a percentage of revenues instead of hard-coded numbers. When we received this company's financials, we saw that the materials and supplies ran an annual 1.5%. Therefore, we created a calculation in these cells like this. All calculations start with an equal sign, and then we click the revenue cell for that month. Then we type in the multiplication sign, which is the star above your 8 key, and then type what we want to multiply the revenues by. In this case, it is 1.5%. We then copy that formula across the entire year. We now have each month's revenues being multiplied by 1.5%, and the annual budget, of course, now equals last year's total percent. If you decide to increase or decrease that percent for the year, you can simply go back into the cell and change the percentage and then recopy it throughout the year. The advantage of converting your direct costs, when it's applicable, to percentages is that whenever you change your revenues on the Revenue Forecast or Revenue Drivers tab, it will automatically adjust your direct costs and show you a more accurate gross margin. You want your control panel set up so you can run what-if scenarios very quickly and have them accurately represent your company's performance in each scenario. A very important row in your control panel will be your gross profit percent. This is how you will know year over year if you are gaining or losing production efficiencies. The natural trend for all companies over time is to become less efficient. Without an intimate knowledge of your gross profit percent, you won't know why your company is becoming less profitable and not producing the cash that it used to. Now, your fixed costs. When you receive your control panel, your fixed costs will be identical to your previous year's fixed costs, since we cut and paste them in from your previous year's financials. Your fixed costs don't usually move up and down with your revenues like your direct costs do. One exception could be your credit card merchant fees. In this company's case, his prior year's annual fees were 1.2%, so we calculated this year's fees to be the same for each month, as you can see here in the formula bar. As we scroll down, you can see all the rows of his labor-related expenses are in white because they are imported from the Labor Plan tab. You can see that his payroll taxes, workman's compensation insurance, and employee health insurance are also imported from the Labor Plan tab. You can also see how he has budgeted his employee bonuses manually at various points throughout the year. We now have arrived at what is famously called the bottom line. Here we can see that when he has budgeted a loss for the month, it shows up in red. Since he has so many positive months, however, his year-end will end up substantially positive. You can see on the next line down his cumulative monthly balance. You can then see how his cumulative profit grows as each month's profit is added to it. On row 224 of your control panel, there is some information that you will need to input. It only takes a minute, and it is very important for calculating your cash flow. This row adds up all expenses that go into your accounts payable for any amount of time. Please review all of your expenses above and add up all of those expenses that are not paid COD and are put into your payables. For those expenses that you purchase on your credit card, please include them in this calculation as well. This is how we perform the calculation. Start with an equal sign, and then scroll to the top of your direct cost category. Click on the first cell you come to as you work your way down from the top that you do not pay COD. After clicking on the cell, click on the plus sign, and then click on the next cell that is also not paid COD. Please repeat this process through all of your direct and fixed costs. If you encounter an expense that is sometimes paid in cash and sometimes paid on credit, decide what percentage of the time that it is paid on credit. Then you will need to add a calculation to the formula. After the plus sign, type open paren, and then click on the cell, and then type in the multiplication sign, followed by the percent that you want to multiply it by, followed by a closed paren. So when you are done, it should look like this: plus sign, open paren, C60, multiplication sign, 50%, close paren. You will only need to perform this function on one column, then copy that formula across all 12 months. Once you have completed this task, you are ready to go back and review your budget line by line to make sure it truly represents what you want your next year's financial plan to look like. There is a strong tendency in your first year of budgeting to be very optimistic. Optimism is great, but it sets a high bar for you as you execute the activities required from your budgeted numbers. This is where your trainer will provide an invaluable service to you and your company, as you will see on the next video, which explains how to view your budget versus actual performance.